Hello, everyone. Welcome back to our part 3 tax edition. We're going to have some things we're going to talk to you guys about today.
Hey, everybody.
What's going on?
Hello.
All right, we can go ahead and get started. We're not going to sit and just wait. So we're going to start with our introductions, and everybody else, you can come on in. When you come in, just comment hello that you're here and participate in the conversation as much as you can.
Well, I'm gonna start it off first since my microphone is working. For those that don't know me, I'm Latoya. I'm in the food service industry. Yes, then my microphone.
Keep going. Yes, you're good.
Yep, there you go.
I help clients in the food service industry to keep cash in their business. As we all know, cash is king. So the more money you have, the more you can maneuver. So got that out. No mess ups.
Okay.
All right. So am I next up?
Yep, you got it.
Okay. Well, you all know, if you don't know, I'm sorry, but I'm Shane the Negotiator, and I help coaches and consultants and service providers to scale beyond 6 and 7 figures using legal, tax, and accounting strategies. And I'm going to pass the mic to Rolanda.
Hello, everybody. I'm Rolanda Watson, and I help those in the transportation industry to minimize their taxes while maximizing your profits so that you can add trucks to your pallet and make more money. I also help current and new tax professionals start, stick with, and soar your tax business. So if you're looking for tax software or coaching, you can call me.
Hello. I'm up. Hey, everybody. I'm Katrina Martin. I am based out of Michigan, and I own Wild Tax and Advisory Service. I specifically help those in the real estate space, real estate investors, specifically short-term rental owners. You'll think Airbnb and VRBO, helping them scale and grow their businesses with tax strategies and solutions. I also help tax preparers with tax planning and other solutions along that matter. I am excited to be here. These are my partners in crime. They're mad at me today because I missed our morning meeting, but I'm sorry, ladies.
And then she gonna come on here glowing and showing us out.
I know. She got all the extra sleep.
But our clock didn't even talk to me this morning. But back to you, who's it up? I was the last one, right? Okay, cool.
Yep, you were the last one. So this is our 3rd session. We started back in June, and we've been just having conversations. Just as a recap, we meet every Tuesday mornings, and we have some of these same conversations privately within ourselves. So we decided that why not share the knowledge and share it with you guys. So that's why we decided to come once a month on Tuesdays, on usually the 3rd Tuesday of the month, and we come and we share that wealth of knowledge with you guys. So participate, ask your questions, leave your comments, and if you want us to talk about anything in particular, drop that in the comment as well, and then the next time we can actually incorporate that for you. So try to be as interactive as possible, and so that we can continue to keep this going. So today we're actually going to talk about deadlines and you guys being in trouble. We're going to talk about that. So we'll save the trouble, you guys in trouble, for last. So you want to stay tuned if you catch the beginning of this to listen to what we're going to be talking about with people being in trouble or potentially being in trouble. So we're going to start off talking about deadlines for tax filing. Remember, tax filing is not only due by April 15th. There's other deadlines that you guys may or may not know about that we're going to talk about. One of which we're going to talk about S-Corps.
S-Corps are coming due in September. So those of you who took a tax election for S-Corp, well, first of all, what do we mean by S-Corps? For some of us, you find that your businesses are really growing, and we love that. And you are profiting $50,000, $60,000. That's your net profit after your expenses. You are still a single member LLC and you want to save money. One of the ways that we as tax professionals help you with that is establishing an S Corp. Those taxes are coming due in September 15th. And we want to make sure that you're ready for that. So if you say, I think I filed an S Corp, I think that's what they did. I'm on payroll. They're taking out payroll taxes. You might be an S Corp and you want to check with your tax professional. If you don't have communications with them, you can check with one of us and we can see if you are an S Corp and we can make sure that your books are ready and you are ready to file your taxes by the 15th of September. Because guess what? If you don't, you'll have penalties to pay simply for not filing on time. And no one wants to pay additional penalties, right?
Right, and those
Exactly.
penalties run pretty steep.
Yep,
Yeah,
those penalties
absolutely.
are pretty steep. So what's the next filing deadline we got coming up, guys?
Before we mention about that filing deadline, I wanted to tell you about a client of mine that has an S Corp. So
Okay.
they did file an extension. This was in 2019 tax season. So for 2020, when they did their taxes for 2019. So they filed an extension. For some reason, New York State didn't get the extension. So they assessed the penalty. So the client receives that the letter that says, hey, we're going to assess this fee because all those penalties from since 2019, it was added on. So we actually had to call New York State IRS and be like, hey, we did. I know I submitted that myself because I have the proof. Now they couldn't find it in their records, but what saved that client is because my awesomeness. I kept the records that showed that it was faxed and I had it timestamped. And when we went ahead and submitted that, so they did go ahead and waive that. What they suggested is that in the future to call them, to give them a heads up to say, we've filed this extension if you faxed it, to make sure that they got that.
Yeah.
It is a lot, especially during tax season, to have to call them to let them know. But at least if you keep that record, you have proof that it was done.
You have to actually do that even with the IRS, because now they're saying that a fax document is not confirmed as a receipt.
Yeah,
So you really want to be careful with that. I found myself sending it another way where I have a signature confirmation to make sure that, federally that the IRS has our documents, because we know.
Yep.
Yeah.
Yep. So then the next deadline that we're going to talk about is the C Corps. C Corp. Well, we'll let our glowing lady take that one away.
No, you did not cover me. Yeah, man. Don't be mad because I was missing. But yeah, so the thing that I think that we want to think about for returns for any extensions, whenever that original due date was, whenever you file an extension, you have 6 months from that date. So we talked about partnership and S corporations, those were due February 15th. So you go 6 months forward.
March
So
15th.
March 15th, I'm sorry, March 15th. So then you have to go 6 months forward. And the same thing for individuals and corporations, 6 months forward. So the thing to think about, that's on our exams, is EA agents too. That's a big part of the test, 6 months.
yeah,
So one of the things that you want to think about, I feel like a lot of people are waiting to that deadline. I got a lot of clients that we filed extensions for, and they're sitting in the portal and they're waiting till it gets closer to October 15th. The thing to remember is just because an extension was filed for you, that does not mean that the bill is not racking up.
Yes.
right.
You're not going to have a failure to file penalty because of that extension. But if you owed taxes based upon that extension, the interest is accruing daily on that.
Yes.
So every day that you put off, it's costing you more money. So it does not benefit you to wait until October 15th or September 15th to get your returns in. You need to get those in ASAP, because you don't want to be in the 9th hour, because the bill is still racking up on those returns. If you owe them $1, you owe them more than $1 right now.
Yeah.
So don't put off until that deadline, because it's really not a pause. It's not really a pause. It's just giving you more time to get your ducks in a row to file it. But if you already have all the documents, none of the numbers are going to change at this point. that year is over. None of the numbers are gonna change. So if you have all your documents and everything that you need, then go ahead and get all your documents into your tax professionals, because the numbers are not gonna change, but your numbers on what you owe the IRS, if you owe them, are accruing and going up on a daily basis. So
Definitely.
make sure that you don't wait to these deadlines. These deadlines are the date that the IRS starts adding additional penalties on to you.
Yeah.
But the interest that you owe is accruing right now.
Yeah.
In a general rule of thumb that I would say, when every year, when it's time to file your taxes, no matter what type of taxes that you're filing, strive to make that deadline. Now, of course, if you're just unable to, for whatever reason, it really doesn't even matter. Even when you do that extension, start preparing to file at that time. So you may not file it for 2 more months, because even though it's not due till September, it doesn't mean you can't file it in June.
Definitely.
Don't wait, just as Katrina just said, don't wait. So start gathering those documents and materials that you need and putting everything together at that time while it's fresh. You were already in that mode anyway. Don't set it to the side and be like, oh, I got 2 months of vacation now. Let me worry about my vacation and come back to that later, because you'd be surprised what documents will come up missing in that period of time.
Yeah. Absolutely.
Especially if you are, an S corp or a partnership, because you have 2 tax filing obligations.
Yeah. Yeah.
One as the business owner,
Mhm.
and then the pastoral part.
Yeah.
Mhm.
of your
Excellent point.
business. So,
Yeah. That
Yeah,
is a
that's
great
great.
point.
That's a great point.
yeah, so why
Mhm.
would you wait double time?
Yeah, now you got penalties on both, or interest.
Yeah.
Interest accruing for
Right.
both. And then the thing you have to think about too is on partnership returns, you're holding your partner up too, because you need documentation from that partnership return for all those partners to file their personal tax returns. So you got to think about how much compounded interest is brewing for an entire group of people, just because you're waiting for a date to hit for documents that you already have. So
Yeah.
it's just not, that's a cost saving mechanism for your businesses to go ahead and get it taken care of now, because otherwise everybody in that partnership is on hold, because you need that K-1 from that partnership return in order to complete your personal tax return. So if you have, if you got you can have as many as 100 partners, everybody's waiting on a K-1, and everybody's tax returns interest is brewing.
Yeah, and not only that, the 1099s that you have to send out, even if you send those things out early, you're still looking at the integrity of your business. One of the things as business owners, we want to set ourselves apart. And if you're going to set yourself apart, you want to do things at a certain level, because that's going to reflect on how you handle business other ways. And many times we try to talk to our clients about watching your numbers, making sure you understand your numbers, and being timely. We don't expect you to know everything. We don't expect you to get everything, but certain deadlines are important, not only for you, but for those that you're helping to help them live their lives. As a business owner, you are responsible to help others in their life. If they serve under you as contract workers, partners, your actions have an effect on so many others. So really, really try to file your taxes timely. And if you're in the place when we're at an extension now, go ahead and start getting your information to your professional now. Give them the consideration of let's get it done, so you can be ready for next year. Because believe it or not, we only have
3, 4
months.
Yeah, really, because September is brewing. And the thing too to think about is this is really tax planning season. You know what I'm saying?
Exactly.
We're going into Q4. You should be looking at your numbers and see how you can come out strong for the end of the year.
Yes.
You should be looking at how you can keep those profits into your business. Are there any purchases that you can make for your business this year that can not only be a depreciable write-off for you, but to also help you get some more money in your business? What kind of income can this particular item bring into your business? It's time to start thinking about strategies to grow your scale and grow your business, and not talk about what happened last year. So last year we should be closing out. So you can really focus on closing out this year strong. And you can't do that if you're still pulling documents from prior years. So let's,
Yes.
let's be really, really mindful about how do we really grow our businesses. And really, this is basically like keeping those running subscriptions that we talked about before. You know how you sign up for the subscriptions and you forget about them? That's what they're sitting there waiting for that deadline date is. You're just paying a subscription fee. You're paying a subscription fee every day. And it doesn't,
Interest.
it's just giving money, giving your profits away out of your business. And so you're not in business to do that. We're always trying to think about cost saving solutions and that sort of thing. But one of the saving solutions is being proactive about not only, being proactive about your business and keeping your profits in your business. And this is basically just giving money away.
One of the things, I'm sorry, go ahead, Shane.
Yeah, I wanted to remind people too, because it does happen. I know you might be like, well, duh, we know that, but that's not necessarily the case. You cannot file your personal taxes before you file your business taxes if you are an S Corp or a partnership, because you need the document from those businesses, from the partnership and those S Corp. You need what's called a K-1 to file your personal taxes. You need the business profit or loss to add to your other sources of income to file your taxes. So there's no way you can do your personal taxes and then file your business taxes, because then you're going to have to go back and amend that personal tax in order to add that in, which in turn open up the window for an examination, because they're going to want to know, why did you not do that the first time?
And then it just costs you more money, because I know we as professionals, if there's an error on a return that we need to amend, we do that, no problem. If there's additional income that you had on the return, that's an additional fee, because we have to go back and prepare your return. So, so you're costing yourself more money in a lot of areas when you don't really have to. And I'm just about, really, this is a profit season. So let's work. The goal right now is to be working on how do you close out the rest of this year at a record high.
Yeah, absolutely.
So that's where our focus should be right now.
Absolutely.
I wanted to chime in on something that you were saying, Katrina. We are really coming into the fourth quarter. For our business owners, this is the best time to look at your profits and then think about yourself personally. For business owners, one of the things we miss out on is a retirement plan.
Yeah.
Because we are business owners and we're trying to make sure that we hit the deadlines or that we're growing our business, we neglect to think about ourselves when we get to the place where we want to just kind of chill a little bit. So what if you're making your profits and at that fourth quarter, you take a good chunk of that profit and invest it back into yourself for a self-employed pension plan? That's a great tax planning savings for you.
Yeah.
And that way you're not paying taxes on this profit. You're still using the money for your future and you're preparing for your next phase in life. No one wants to do the hard work for the rest of their life. So let's think about your business holistically. And a part of that holistic is making sure you're preparing to pass the business on, your legacy. That's what we talk about a lot in this group, your legacy. So let's plan for your legacy. But you can't do it being reactive. Right. You have to be proactive.
And not in January, because this, there's some things you can do, but right now it's time to start thinking about IRA contributions.
Yes.
And if you're not an S corporation, this is the time to elect to be a S corporation. If you've made enough profits in your business to put yourself on payroll, typically over $40,000, because you can file a S corporation election right now and have it apply for this entire year.
Yes.
Wait until next year, and then you've already missed the opportunity. Yeah. So this is really the time where you can really make some changes in your business and really position yourself for the new year to be your year.
Yeah, and a lot of times, go ahead, Toya. Go ahead.
A lot of business owners, they wait a long time because they don't have the.
Your audio is yeah.
Is it bad?
Yeah.
Okay. So what did you hear?
A lot of times business owners
wait.
So most business owners, they wait to the last minute. We know that.
Yeah.
Because we do it too.
You know, but the difference is they haven't had a bookkeeper or a professional the whole year long.
Yeah.
So their record keeping is a mess. Their receipts are not in order. So that is particularly why they keep saying, oh, I'm gonna get to it. Next
Yeah.
thing you know, it's September 14th,
Mm-hmm.
and you up to 3 a.m. trying to ask your tax professional to pay
Mm-mm.
your taxes.
Mm-mm.
Like
Yeah.
Rolanda, be proactive.
Be proactive. Yeah.
Yeah, yep. Another one thing that I know I made a video last year when I was talking about something similar, when I was saying, if you fail to plan, then plan to fail. So if you go back on my page and you scroll back, you'll be able to get about 20 minutes of me talking about that. Because realistically, with most things in our lives, I mean, some things you can just wing it. You get up out of the bed in the morning, you can wing that. But if you really want to have a productive day, you might want to plan that out a lot better. So if we plan out our day, why would you not plan out your business? Why would you not plan out your finances? Because it's going to take you a lot further. So a lot of times, when we start our businesses, we're like, oh, we're not there yet. Well, who says that you're not? You're, you can be wherever that number is that you're planning on getting to. You still need the foundation in place so that you can get to that place. It'll be a lot smoother. So don't wait until you think you have reached a certain revenue point or a certain status before you start implementing these things. Because the same way we can find money for Netflix and Hulu. I know we sharing this stuff, family members and all, but you're finding this money to do it. Uber Eats, because I'm guilty of Uber Eats. We find the money to do these things. So if you're serious in your business, you're going to find the money to pay for the professional to do that and not complain about the prices, because when your behind is in hot water, we are the ones who got your back. We're going to take care of you, before you're in trouble and even after you're in trouble. So you just go ahead and invest that small fee now, so you don't not investing the big fee later, which is going to roll us into why a lot of people in trouble right now.
Oh, before we go there, Shay, let me say this because y'all know I'll be forgetting stuff. So, so I do want to say, I want to add this for people that are W-2 workers, just because I know we're talking a lot about business owners, but that's who we can do a lot of tax planning and strategies and stuff for, and those deadlines are really hitting for. But I do want to say something to W-2 earners right now, because I just had a call this weekend with a couple of folks, and some of the things I was telling them to do right now is to, if you haven't been, because the year end's coming for all of us, so if you have not been investing in any of your pre-tax benefits through your employer, make those adjustments now. So if you have not put any 401k money in your 401k, do so now. If you can max it out before the end of the year, you will not. I know you think you're going to miss that money. You're not going to miss that money because you're not getting it anyway. It's going to the IRS. So it's going to reduce how much you're taxed on. So it's going to reduce how much you need to pay in tax.
Definitely.
So if you can put money in your FSA, and if your company has an HSA, I highly recommend you do that, because as you get older, that can operate as a retirement tool for you once you retire. It's not use it or lose it like a flex spending account. HSA accounts, if you leave that money in there when you get 59 and a half, if you need to pull it out as retirement money, do that money stays with you. And you can use that money even on Amazon if you're buying Band-Aids and all kind of stuff for your kids. But that's pre-tax money. Do any pre-tax opportunities that you have with your employer, implement those, whether it's childcare, transportation, anything that you can control before it gets to that tax, before the IRS touches it. Use that service, because that's your biggest savings opportunity for you. Business owners have a lot of tax opportunity write-offs. As a W-2 employee, you don't have all of that. Your opportunity comes from your pre-tax benefits. So utilize those things. It's not going to matter to your bottom line. You may miss $1 or $2, but ultimately the $1 or $2 that you're missing, if you check your retirement account, is already sitting there growing.
And
That's great advice.
Yeah, and with the HSA, you can change that at any time.
You can change it at any time, and you can change your retirement if you're not contributing to your 401k, or you're not contributing the max this year. I think you can put 19,200 per individual under age 50. Put it
Go
in there,
for
because
it.
that's not giving away $19,200. That's putting it in your own pocket. So rob yourself to pay yourself.
In the future.
And if you don't have the 401k plan or the option to be able to do that, you can just do a Roth as well, where that's up to $6,000 you can put in a year to that. Now it's not deductible, but it's already after taxes, you already pay taxes on that money. So when you put it in there, essentially when you're ready to take it back out, you're not hit with no huge tax. You're not paying any taxes on it, only on the interest that you receive off of those $6,000 per year that you place.
And if your great point, Shane, if your employer does not offer retirement planning, you can self-pay for retirement planning and still get a tax deduction for that.
Yes. Yeah.
So, those are things to think about. But anything your employer offers as far as pre-tax dollars, even if you don't understand it, yes, say yes. This is yes.
Exactly.
Yes.
Do you want benefits? Yes.
Thank you.
People are quick to put zero as far as like, I don't want no money taken out. Well, you don't necessarily have to have money taken out, but you gotta pre-tax it. So there's a way to do this. There's a way to rob this train and not be a crook, right?
Yes. 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 I like that one. I like that.
I'm gonna use that again. Yeah.
All right.
So we wanted to talk about PPP.
Yeah, so we scrolling on over to the next point. I said, lots of people in trouble. So 2020 pandemic happened. Of course, we were a little bit terrified because, people were losing loved ones left and right. There was so much uncertainties. And then the government came through and it was like, okay, we can start to assist. So they were giving out unemployment, which a lot of people benefited from that. They were, we had the PPP loans on funding, EIDL loans, and the PPP, which many of it was tax-free money. And you got that and didn't have to pay that back for most people. And of course, that was a great benefit to business owners. So initially, we had the first round, and then we got the second round. And a lot of us didn't qualify for that first round because you had to have been in business prior to February of 2020. And like myself, most of us, we started after that, we didn't qualify. So what happened with that is that a lot of people applied and they got accepted. It wasn't much regulations for that. They was just like, hey, we can give you up to $100,000. And people was like, what? I want a piece of that. So it was $20,000 being dropped here, $50,000 being dropped there. But did everybody actually qualify for that? That is the question. That is the question. Some of you that did applied for this, good and well, you didn't qualify for that loan. You didn't qualify.
She sounded like a mama.
Yep. You ain't qualified. You ain't qualified. However, the temptation was great because $20,000 to some people, that is some people's year salary, unfortunately. So $20,000 given for a business, the temptation for fraud is just there. And it happened. And there's no judgment for any of you that fell prey to that. However, what's given shall be taken away. So at this point in time, the IRS is collecting and finding ways now to start getting some of those funds back. And a lot of people who did it fraudulently, you're going to be in some serious trouble. And even if you did not do it fraudulently, you were legit, your paperwork may not have been the best tip-top shape. And I'll let Rolanda elaborate a little bit more on that. They're coming to make sure that, all your T's are crossed and all your I's are dotted.
So, so a lot of what Shane said, we need to be prepared for. In the first round, it was on a trust basis. The second round, they began to pay a little bit more attention, but we still had situations there. So not only the IRS, but remember, this was small business, SBA, Small Business Administration. This is dealing with the government, which means that if you cannot prove that you had this income, this business was active, even if you got the EIDL loan, the
Right.
grant portion, there was a $10,000 grant.
Yeah.
They'll be
Yeah.
looking at that information too. And they want to be able to see that you have the business you said that you had. You can prove the bank account was active at that time. You have the income and the expenses and the rental homes or the additional whatever you said. Now, if you cannot prove this information, then you will have to pay it back, but there will also be there could possibly be a felony that you will have to deal with. If it's just a tax implication, then of course you can deal with your tax professional. And to tax professionals, if you were in any way a part of providing numbers that were not accurate, we will have to be accountable for that information as well. Because remember, you had to sign off that you did this application. When we were going through and we were doing the EIDL or the PPP, you had to sign off that there was assistance for this application. There are some people who have found themselves in a situation where someone did their applications and they just put some things on there and they say they don't know who they are. I've talked to some. We would recommend that you speak to a tax attorney and find out what needs to happen for you. One other thing I want to bring up is typically we have 6 years from the time that we have a situation where you don't need to prove anything. In this particular situation, and in some tax returns, the IRS and SBA will go out to 10 years. What does that mean? Get your records, keep your records, make sure you put them in a place so that you won't forget them. Because at year 9, we barely remember what we did last year.
Or this morning.
What we had for breakfast.
Yeah. So when someone comes and say, 10 years ago, 5 years ago,
Yeah.
you filed for this, can you show proof of what you said? Do you even remember what you said 2 years ago?
Yeah.
So we just want you to be prepared. I'm not about promoting fear, but I am about promoting this is real. This is real. So when you made those decisions because you had to, then let's do something about it. And let's make sure that we're proactive in our decisions so that we won't have to be reactive. And again, cost our families a lot of unnecessary pain.
And this is
Anybody else?
This is where the 941s are going to come in at. Because I can recall.
Yeah.
Tell them what the 941s are in case they don't know.
So the 941s is reporting for employers that report to the IRS wages and employees during the period. So one of the pre-qualifiers or questions for the PPP was for employee retention. So if you recorded that you had 30 employees, right? You paid all this money, they're going to go back and look for those 941s. They're going to look for those employees' W-2s. And if those earnings don't kick and die, you in hot water.
All right, now they got y'all scared to death. Let me
No,
come
we
in
don't.
and help y'all. Get y'all ducks in a row. Get y'all paperwork together. Make sure you got backup.
We just told the truth.
They done came in here like doom and gloom.
No, we didn't. But you know what? It's real. It's real.
It is. It's real.
It's real.
And it's very real, absolutely. And I think the biggest takeaway is make sure that you can validate. The biggest thing for anything is validation. You need to just be able to validate what you put, and saying that so-and-so did something for me is not, that don't cut it if your signature on the line.
Exactly.
So, as adults, we're responsible for what we put our name on, like that we read, even terms and conditions of signing on to Google we're responsible for what we do there. So so saying blaming somebody else is not going to cut it for you. So definitely make sure you be responsible for yourself. And, and the biggest thing I think is just being honest about it. You know what I'm
Yeah.
saying? By the time somebody comes to you, they already got the answer. So, you really need to be,
Tell the truth.
you need to be honest about things. So, but if you have things to validate that, then hey, back it up, So that's really the biggest thing. And then one of the things I wanted to talk about too, guys, is the Inflation Reduction Act. That's where everybody is talking about right now, because they're talking about the IRS hiring 87,000 agents, but there's $300 billion that's going towards this act. But the thing to think about in that is, I'm looking at the top line items that came out of that. 124 billion of the 300 billion is going towards tax enforcement. But one thing to think about, and I know a lot of people are installing fear saying they're going to be auditing, but in all honesty, I'm going to say this: audits are at a record low only because the IRS is understaffed.
Yeah.
The infrastructure is outdated. They just don't have the manpower to do things. It's not, they've always audited, you know what I'm saying? It's just low now because of the pandemic. People are retiring out and they haven't replaced people. So a lot of this money is going to go into hiring roles that have been void for a long time, people that are retiring out, and in the space specifically where they lack at. Their IT sucks. And if you try to get a hold of them, their IT sucks. Their phone systems suck. So they're going to have to invest in modernizing those things. So it's not necessarily that the audits are going to increase. The audits are going to go back to the level that they were supposed to be at, because pandemic slowed them down, and then retirements and just staffing slowed them down. So they're going back to the levels. So it's going to increase, but it's actually going back to the levels that they're supposed to be at. But a lot of the things, hopefully, prayers up, is that it's actually going to go into the infrastructure to make working with the IRS a lot easier, because right now you sit on the phone with them for hours, and then as soon as you hear somebody pick up, they'll hang up on you. So
You spent an 8-hour day. I didn't spend an 8-hour day before trying to get through on several devices.
And believe it or not, we get hung up on as well.
Whole businesses have started just to sit on hold for the IRS for us.
Absolutely. Like, we pay folks to be like, just when they answer, then you just call us.
So I'm hoping that the money, the influx, I don't think it's about to be like this huge regard of just going out auditing people left and right, because they're audited naturally. That's just part of the process. But the bottom line is they don't have people to do just basic jobs. That's why there's 2020 returns sitting on desks in IRS locations. That's why that's why the check that you sent them has not been posted yet. That's why returns that have been accepted, they're not even showing up in the system yet. That's why when you call, they don't have a record of what you sent them 2 years ago, and you have to go back and redo it again. There's nobody there to do the checks and balances.
And even with all of that, it's we're talking about keeping up and finding this stuff, and you can recreate those years. If you really sit down and gather whatever documents that you have, whatever receipts that you may find, which usually receipts, they fade out, but these days with the cheap ink and paper they're using, 2 days a receipt, you can't even read that thing.
Right about that.
So good luck if you got a receipt like that. But for the most part, you can piece together bank statements, and your memory, you can be surprised what you can recall, and recreate as much as you possibly can, as accurate as you possibly can. You may forget stuff here and there, but as long as you can recreate a good portion of it, you're going to be fine. It's not doing anything at all where the problem lies.
Yeah. And then I think that's when it's good that that's when when we talk about commingling funds, that's when that comes in handy. Because you can at least you can go pull your bank statement, or if you got you shop on Amazon for your business supplies, you can pull that Amazon report, and it goes back for years. So that's when not commingling stuff really comes in handy.
It's really important.
Go back and validate some stuff. That's when that, because if you just using your personal account as your business account, or vice versa, you don't know it's a mess trying to unravel that stuff.
And then you're giving them permission to look into your personal things at this point.
Yeah.
You definitely don't want to do that. You don't want to open any unnecessary doors. So if you're not commingling, then this business credit card is just for this. just for business, and you can easily reconstruct. Like Shane was saying, you can easily reconstruct your records, and the IRS allows us to do that. You can
Mhm.
reconstruct your records when you have a system. We often talk about having a system for your business. So when you have that system set up, it's easier to go back and say, okay, I did this. And your
Yeah.
calendar as well. If you
Yeah.
have a set calendar, that calendar helps you. Oh, okay, I went to pick this person up and this happened. So you can have your memory from that with your logs.
And you should really be operating your business from a perspective that you're going to be audited.
Definitely.
You know, just operate from there. And so then that way you'll make sure that you got the checks and balances in place. It's not if, that just operate like that's a guaranteed, because the biggest thing, I listened to this IRS agent, he has a podcast, and a former IRS agent, and he was talking about how whenever he didn't even want to spend a whole lot of time on stuff, but once you open up a door, then he had to go down it. So if he asks for something and you can hand it to him, even if it's notes jotted down, like from a receipt with who you met with and all those kind of things, the date, what you talked about,
That's it.
if you can hand them that stuff, they're out of your hair. They're out of your
Yep.
hair. They just want to know that you got this. It's just basically checks and balances. But if you start squirming and you don't have nothing, that's when that's when it pings them to say, I gotta go deeper. There's something's off here. So
Right, because if you had like one main bank account, like say you use like an example of that, they say, hey, we need for you to show proof of your income. And the only income you reported at that time was for your main business, but you might have gotten a 1099 someplace that you forgot about. And you like, oh, you mean the other bank account? You want me to send you that too? Now you done opened another door. Nobody asked you that. You opened a whole nother door. Hush your mouth, give them people this one over here. They didn't ask you nothing about that one over there. So that is an example. Now, not that you're trying to, evade things or not be honest, is what they ask for, give them that, nothing more, nothing less. If a police officer pulled you over for speeding, you're not going to tell them you was also talking on your phone without a headset. You're not going to do that. So hush your mouth. Almost like when you're a kid, they say speak when spoken to in the old days. Well, that's kind of same concept. We kind of gotten away from that, and we don't talk to our children like that anymore. Well, you guys talk to your kids because I ain't got any, but that's kind of the same concept. I talk to the dog that way. But it's the same concept. Don't give them any more information than they ask you for. If they say, what color is this? And it's red, say red. Don't say orange and there's a little bit of blue in there and a little green. Don't say none of that.
And that's a good point, Shane. And that applies to everything. Like
Everything.
that applies to life as just an adult. Just don't overextend to that point where you're giving too much information. Because I know I was talking to a friend of mine who's in the mortgage business, and that's the same criteria for them. If they ask for the 1040, you give them those 2 pages of the 1040. If you start giving them backup pages on Schedule 2s and 3s and Schedule A's and C's and D's and E's, you open up a whole nother can of worms. They only ask you for now they can see, because the 1040 just populates the line item, the dollar amount. All the backup pages have all the detail. Now they got to get into the details.
And they looking at your business.
Now they all now they need to know who owned this property. You never mentioned you were an owner on. Now they need to know. So give them whenever that they ask somebody asking you for something in business, give them that, just that.
Let them ask you for the other thing. Don't
let them come.
Volunteer it.
Yes.
Yeah. Yeah, because now you volunteer some stuff. Now you don't cancel yourself.
Do we have any questions?
Oh, let me see. And somebody, I think we want to talk about bookkeeping cleanup too, or did we kind of cover that already?
We touched it briefly, but I guess she could mention it again. So Toya is our bookkeeping queen over here. It's her thing. That's her thing. The rest of us, not so much, but did she love bookkeeping? But yeah, we'll let her talk to you guys about that and how that applies to some of these things we're talking about.
Yeah, so with bookkeeping, basically it's a systematic way of just record keeping. Most business owners they try to do it themselves. You know, some of it you can, but it's more than just plugging numbers. Just like a tax professional, we're doing more than just putting in information. We're making sure that if you are purchasing fixed assets, meaning a piece of equipment that goes to creating revenue in your business and has a useful life of longer than a year, you can either depreciate that over the course of the useful life, or you can do bonus depreciation or other options. But if you're not aware of that, you could be losing money. So what a cleanup is, a professional such as myself or the other young ladies, we come in, look at whatever accounting system you may use, FreshBooks, HoneyBooks, and QuickBooks. There's also what? Zero, Wave.
Wave,
Yeah.
yeah.
I'm more of a professional in QuickBooks. So we go in there and get all of your expenses properly categorized. We're making sure that, you know, we talked about receipts, making sure that those high dollar items, you do have record keeping for those. We also go through your basic financial statements. At the minimum, looking at your balance sheet, which tells you about your assets and your liabilities, your profit and loss, or the income statement. And my favorite one is the statement of cash flows. A lot of business owners ask, well, where's the profit? Your statement of cash flows will explain that to you. So not to go into much detail, but because I will go on and on about that. But you definitely want to have bookkeeping in place so that when it is time to file your tax return, you're not scrambling.
Definitely.
You
Yeah.
can give your tax professional exactly what they need, no more, no less.
Now you wanna disclose extra information, as much information to your tax professional. Your tax professional is like your lawyer and your priest. Tell them everything. Tell them everything.
Well, I don't know about everything.
Not everything. Everything business related wise and things like that. You want to tell them about that. But yeah, you're pretty much those reports that Toya was mentioning, they are like a report card for your business.
Yeah.
That's how I like to describe it, to kind of make it easy for you guys to understand. It's like your business report card.
And when you're ready to truly operate as a business owner and grow your business, and because there's two things. So there's like the space of your business where it's kind of like a hobby, you know, it's something fun you do and you're just making some extra money. It's a hustle. So when you go from hustle mode to from hobby to side hustle, that's when you're kind of trying to DIY everything, right?
Yeah.
When you're trying to go to business owner, CEO, you got to start making these investments in your business. And that's when you start handing things over to professionals, and you can't DIY everything. You have to find those, this is the foundation of your business. I say that all the time. I'm sick of hearing myself say it, but the accounting piece of your business is the foundation of your business. You are not in business. You're not in business to make friends. You're in business to make money, right? You're not in business to buy stuff. You're in business to make money. So this is the essential part of your business. This is the key piece of your business. And this is the part that people put to the back burner every time. I'm gonna deal with that tomorrow. I'm gonna see if I'm gonna try to fix that myself. I was talking to a potential client earlier today, and they said they had QuickBooks, and I was like, "Do you know how to use it?" And they were like, "Well, no." So just having something or just acquiring something that you and same thing with TurboTax. Their mantra was everybody's a tax preparer. Really? No, really.
No, you're not.
No, there's things that we still learn every day. And we've been entrenched in this thing probably about 150 years all together. So, you know, And we still have questions from time to time. We
Yeah.
still have to reach out from peers, and we still get continuing education all the time.
Definitely.
This
Right.
stuff changes constantly. You have to be fully immersed in this. So everybody is not a tax preparer. Everybody is definitely not a tax strategist, and everybody is not a bookkeeper. Everybody is not a CFO. If those are not your strengths, then operating your gifts and making money
Yeah.
on whatever it is your business does, but
Yeah.
hire professionals to watch and grow your money. If you're not watching your money, you can't grow it. You don't even know what you're working with.
Right.
Yeah.
And guess who's behind the scenes on TurboTax? A lot of us professionals.
Yeah. No, that's only when you raise your hand and say help.
Yeah. No.
Right. Where
But
a lot of the
another thing with the software for TurboTax, Toya and I were talking earlier today. The software for TurboTax, our software is updated continuously.
Professional software for tax.
Professional software is updated continuously. We ran into a situation earlier today. Toya, can I tell just a little bit?
Go
won't-
ahead.
Oh. We were looking at a situation with the software that our software that we have, and a client that she had did their taxes through a retail. It was through a retail provider, TurboTax, I think it was, and they gave them a credit that the credit had phased out,
Yeah.
and they gave them that credit. This
So they
caused
got-
the client to have a balance when they thought they had a refund.
Mm.
And the client, as the self-preparer, did their part. You know, I've heard people say, well, all y'all doing is entering numbers, just putting in numbers, but those numbers have a formula behind them. And if you don't know how the numbers work, why the numbers work, when they stop working, then
Yeah.
you could get yourself in a lot of trouble.
And it's more than that, because we ask questions. I'm asking all kind of questions. You know? It's because here's the thing: tax laws are, they're written, but every benefit, credit, and deduction has to be applied specifically to you. The
Yeah,
IRS not
your
just giving up
situation.
they're not just giving up credits and deductions. We have to.
if you miss it, they're not
make
gonna go
that
back in there
apply
and
to
do
you.
and give it to you.
Certain-
Yeah.
Absolutely. So certain questions have to be asked, because we need to see if we can get this to apply to you. That's why we're all up in your business, because they're not just gonna give you all the credits and deductions that suit you. We
Yeah.
got to figure out which ones you qualify for and find out other ones that you probably never even heard about.
Yes.
And see if those are things that we can pull into. We're trying to get your bottom line to zero if at all possible.
Mhm.
Yeah.
Or if you're qualified for a refund. I only want you to get a refund if it's some credits that you're getting. If it's just your own money back to you, I'm gonna tell you how to put that money back in your pocket throughout the year. You know what I'm saying? So, but the biggest thing is it's not plugging in numbers, it's building
No.
situations to make credits and deductions apply to you.
Knowing when
That
things
is
phase
correct.
in, when they phase out, how they
Yeah.
apply to you. Sometimes we're asking questions about your house. When did you do the upgrade? What kind of did you get energy efficient? Those are
Yeah.
credits.
I just had a client reach out, like, we just sold our house. I have a question about that. So my question: how long was it your personal residence?
Yeah.
Because I'm trying to
Exactly.
figure out if we can get you an exclusion,
Yes.
if not a full exclusion, if you weren't there 5 years, maybe we can get you a partial one.
Partial.
So I'm trying to make sure that you're not paying the capital gains on this, so you can keep all that money in your own pocket. So this is the reason that we come back with questions for every, and this is
Yes.
why a lot of times when people say that they ask us for questions and we don't give them a clear answer, because if you call me can I ask you a quick question? And then you shoot out a tax question to me. A lot of times, 100% of the time, we all say the same thing. Well, it depends.
It
Yeah.
depends. There's no quick answer.
Because
Right.
we have to know your whole makeup before we can, because one thing changes something else.
Yes.
Right, because it's like she just said about the capital gain. You might say, yeah, I lived in a house at that time, but did you get a divorce? Did you remarry? That'll change. So and you guys may not necessarily know that, and you don't expect it to, because you're not in
You're not.
taxation. So
Exactly.
you're not going to know. I know
Yeah.
I did have a client of mine in 2020, when you file your taxes, I think it was for 2019 into 2020, or if it's 2020 when you did it in 21. And there was, if you owe taxes, you were able to break those payments up over 3 years. So this client filed on TurboTax, and of course, it automatically gave you that 3-year option, or they might have checked the box. I'm not sure. Well, this person doesn't do taxation, just follow the prompts on TurboTax. That was the end of it. Well, fast forward this year, I did file their taxes for them. A few weeks later, they got a letter. Of course, they send me the letter, and the letter is like, oh, you owed, and there's a penalty because you didn't pay by December 31st, which the taxes you were supposed to pay over 3 years, you have to pay them every year, a portions of it by December 31st for 3 years.
Yeah.
That person didn't know that because they filed on TurboTax and they had no idea what that stuff meant.
Exactly.
So those little details matters. And it wasn't any
They
huge
matter.
amount
Yeah.
of a taxes owed, but
Right.
still that little bit of taxes, even if you got to pay $5 penalty on it or $25, that's a lot of money.
And that's a lot of people had that, Shane, because with COVID, you were able to break down. So remember, they were talking about you could take from your 401k and not pay
Yes.
taxes on it. Well,
Right.
really what that was is it was breaking it out and spreading it over 3 years instead of paying
Yes.
for the full amount of the tax on it for the full amount in that first year. They were
Right.
breaking it out over 3 years, so you wouldn't pay a huge penalty. But one of the things I always ask clients too is based upon, I look for federal disaster areas whenever I'm filing. This is a tip for tax preparers too. So whenever you're working with clients and wherever they're located, there's a federal website that you can pull up tax codes to see if there's
Yeah.
a disaster that was in that particular area, and if you can apply a credit to them for that. So and typically there's always something going on. So
Mhm.
COVID was one, but that was the only one. There's been tornado disasters, hurricane disasters, there's disasters year round, flood, Dallas just had a disaster. So the minute they declare any particular area federal disaster, that can actually apply to your tax return to help find some additional tax savings and credits there.
But
Or
you
give you
have
an
to
automatic
remember,
extension,
what'd you say?
Absolutely, or
or
add
give
to
an
the-
automatic extension.
Absolutely. Yep.
But you have to remember for the years moving forward,
Yeah.
because so many people, again, if you're trying to self-prepare, then you're taking that responsibility upon yourself. But if
Mhm.
you have a tax professional, we're going to note your file and we're going to say, hey, we need to make sure that this is covered.
Mhm.
So we can
Mhm.
take those spread out and take those credits, but we need to remember we have credits that we can forward. We have penalties and things that we need to pay. If we have a loss for our businesses, you can move that loss forward.
For years
Mhm.
to come.
Yeah.
Yes, if you know what you're doing.
Mhm.
Right, because you guys might, if you might have done it yourself, and I'm not sure if TurboTax have advanced enough where they may put those carry forwards, but they'll tell you, oh, next year you have this amount. So when you go and file it yourself, you may not know to go pull that number that was remaining from last year to put it onto this year.
Pull it
And you're
forward.
gonna miss out on that. And sometimes those can be $3,000, $5,000 that you're missing out on. And for some people, especially if you're getting a $10,000 tax bill, that can essentially bring that in half or eliminate it completely.
A lot of people don't even remember their logins on there. They have to start all over again.
That part. That's for real. That's for real.
That's true.
That is
That's
for real.
true.
Don't remember their login. They brand new on there. Okay, ladies.
That
is true.
5:02. Do we want to close, say some things in party?
Hold
So
on.
does anybody have any questions that's been listening? I see a couple of people came on and just kind of said hello. No one actually put any questions. And even if after this recording ends and you remember something and you watch the replay, you can just pop it in there. We'll see it and we'll respond in there also.
Hold up, Shane. Can y'all hear me?
Yeah, we can hear you.
Yes, we hear you.
And just for the record, we are not bashing TurboTax.
No, we're not bashing
not.
TurboTax.
It's
TurboTax or any of the retail.
Or
No.
any
No.
of the retail
No,
we're doing.
Definitely. We're just giving our experiences.
Yes.
Yeah.
Before I leave, I do want to kind of give a shout out.
Allegedly.
Right. Before we leave, I do kind of want to give a shout out to our tax professionals. I know this might be a little early if you're interested in software, but my practice, we're doing a discount, or we're doing a 50% discount on your software celebrating my birthday, but that's going to end at the end of August. So let me tell you, if you're interested or looking at different software, if you're interested in someone to walk along with you and help you, coach you, or give education, I do have authorization for CE credits. Get with me, message me, DM me so that we can talk and get you set up.
Yeah.
Absolutely. Hit her up. Hit her up.
Roll up. And I do have, I think I mentioned earlier in the call that I do have a webinar coming up for my short-term rental owners. And I also have a mentorship program that's coming up for tax professionals that want to learn tax planning strategies and
Yay.
codes.
Nice
Get
job.
her up.
And I want to also share. Oh,
What?
go ahead. I want to talk over you.
Oh, no, it's short. We're definitely running a cleanup special. Definitely before 9:15 hits.
And tell them what that is again, so they know. You
So
said the
what-
cleanup special. Tell them what the cleanup special is.
Yes, so for the cleanup special, what we're gonna do is take care of your 2021 data. Get all of that nice for tax filing. And then for 2022, we're going to do your catch up. So your data that hasn't been touched from the beginning of the year, we're going to get you caught up. So definitely email me, reach out, DM me, see how we can help.
Awesome, awesome. And when y'all finish getting y'all books cleaned up, head on over September 6th to come to my webinar where I'm going to talk to you about recession proofing your business. I know you guys been hearing that going around. What's this recession proofing business going on? Well, come on to September 6th and I'm going to help you figure, tell you all about that. So it's going to be talking a little, of course, you got to have good books. There's no need, it wouldn't benefit you in that webinar if you don't have good, clean books, because you're going to need that to do the advanced part of how we're going to recession proof your business. We can't avoid a recession. It happens. In my lifetime, this is probably the third one, and I'm 44 now. So we're going to have more, and you just have to be prepared for it. So in the webinar is what I'm going to talk to you about, how to recession proof your business, how to still continue to be profitable, even when the economy is going in the opposite direction. So come on September 6th. Click the link that I'll have there, and they'll be able to it'll be somewhere around here, and you'll be able to join that webinar, and it's free, FREEE. Now at the end of that webinar, now that's not going to be free, just to let you know, but you can get in for free.
Take what you need. Absolutely. No, this is good, ladies. I had a good time as always.
Good
Oh.
hanging with you guys again.
We had a great time with you guys. So just forget, put your questions in the chat. If you have a particular topic that is just plaguing you, you want to know more information about it, something you heard on TikTok, you need us to verify, let us know, and we can have a conversation about it.
Until the next time.
Next time.
Peace.
Bye.
Bye.